Hey everyone. So, like most of you, I love coffee. And so it's really upsetting and sad when a cup of coffee increases in price. So I was actually already writing about this in our Substack this week, and it's because we're kind of approaching this point. So there's kind of a moment in the Southern Hemisphere winter time when coffee traders will basically have to start looking at their charts and their thermometers because in the highlands of Minas Gerais, sorry, Paulo, I've probably pronounced that completely wrong, near Sao Paulo, and also Parania, which is basically the kind of the coffee Arabica belt where 30 to 40% of the world's coffee is grown because the elevation is between kind of 800 and 1300 meters. Perfect place for growing really good coffee beans. It also means that the crop can be put in direct path of kind of polar air masses that sometimes surge northward from Antarctica. So obviously a few weeks ago, we saw a similar thing happening from the north to the south in the US. But of course, this type of thing can happen in the southern hemisphere as well. So when this type of thing occurs, basically it's just, dry, clear air and skies, but it ultimately results in frost forming on the coffee leaves. And so if this happens for more than a few days, this can really impact the yield of the coffee. And so this is called the geada. It's probably the single most important weather-driven signal within definitely coffee markets, but probably other tropical crop markets as well. So we're kind of looking at this because June through August is when this risk is really materializing. So probably from now is when you want to start to think about it if you're looking at seasonal midterm forecasts. There was one particular incident in 1975, which was kind of this black frost event, which destroyed nearly 75% of Brazil's coffee trees overnight in a particularly bad event. So this wasn't just a price spike. This was something that elevated the price for years because, of course, trees grow slowly. It takes about 3 to 5 trees for them to mature and reach full production. So actually an event of a similar nature happened in July 2021. There was a price jump of quite a significant percentage points, about 30% within weeks. So, if you are in coffee trading, if you are looking at the Brazilian market, then this is a well-known signal that is probably really interesting and something you want to keep an eye on in commodity markets. So I looked up this event because I was thinking about what are the similar types of events to the cacao that we've been looking at. And so coffee, chocolate and coffee, some clearly cash crops that can get caught out. So this week we are going to be diving a little bit more into the detail, and Paulo is going to be showing us more of this weather alpha that we've been trying to explore. And so, in today's episode, Paulo's going to take a deeper dive into the data layer that makes signals like the Brazilian frost more tradable. So, Paulo, without further ado, I'll hand over to you to introduce the episode, and we can take it away.
Yeah, hello guys. Yeah, it's Minas Gerais, right, Josh?
I'm so sorry about that pronunciation.
I know that here in Brazil we are really producing, I think, probably most of the coffee, right, in the world, and weather is really important here. It's the same, I think, actually, right, for most of commodities around the world. And we were working with cocoa, right? And what I wanted to show is the last episode, we just used our platform to obtain data for a few locations from some of the signal templates that we have built here internally at eHab. And we are step by step moving towards creating quantitative trading platform where you can use the signals and machine learning to extract this alpha from the weather data and anticipating especially extreme movements in any market, right? So what I'm going to show today is that same features or the same signals that are available in our platform, they can be obtained using an API call. And again, I will be using Python here. So if I can just share my screen here. So can you guys see it now? Oh, this is something that we're not supposed to be here. It's just like a spoiler for future episodes, right, Josh? We've
Spoilers are
discussed
okay.
this.
It's a teaser.
It's gone. It's gone. I know. So what we'll be showing now. So apart from the signal templates that we have, we have also collected a lot of metadata about relevant assets around the world, especially in this case, the location of the biggest cocoa farms around the world, because it's important, right? We're talking about the impact of weather, and we must know where, right? at which location and which place we need to be looking for. And right here, I'm just using, again, this is from our code base, but it's something that is going into the platform in the near future. I'm just going to get lots of data from cocoa crops around the world. We have some information here, latitude and longitude, most importantly, but also the approximate production and the stages during the year where each growth stages happen: sowing, flowering, pod fuel, maturity, and so on and so forth. Right. So here, this is the code that I've got from our platform, from EHAB's, from WeatherWise Studio platform. As if you remember, in the last episode, we showed that you can generate the signals and look at the charts in the app itself, or you can generate the API call, the Python code, or other formats, but generating the code to call in that signal from outside, right, from another application. In this case, I am going to just run this loop. I've already run it. I'm just downloading two signal templates for each of these 5 locations. Okay, they are all in Africa, and I'm using a data structure here, just using like a JSON or sort of dictionary, and here I'm just converting it to pandas data frames, and this is the result. So I have 2 signal templates. We have drought risk and heat stress risk, right? Again, these are just a few of the simplest templates that we have. We have many other ones. For instance, we have signals templates that are suited or optimized for cocoa, for the exact conditions, weather conditions that might affect cocoa production, and not only any general crop. Okay. So this is just to exemplify. So I got a data frame, data from 1980 up to today. Today, we know that weather data is updated every day, or even more than, it's updated like every 15 minutes, but it's a different kind of signal that we need to request here if we wanted real-time data. Okay, so I'm just going to use data up to yesterday. And what I'm going to do here, okay, we have the signals. We talked about this before. So weather is really seasonal phenomenon, right? So weather variables will almost always exhibit some kind of seasonal pattern, and the signals themselves will do exactly the same, or will exhibit also seasonal patterns, and as we see here. And sometimes, so we have these 3 blank charts here. What they are indicating is that this signal it was never triggered for this location. So it's telling us either that the conditions that I'm using here are too restrict for this areas, or well, probably that, right? I'm using conditions that are never met in these areas, and it might happen because the definitions in this template specifically depend on thresholds, on variables. So average temperature being greater than something for this much time, so sometimes it will not be met. And what I'm going to do now is I'm just going to align signals data with the price data. Remember that we are using the here, right? We are using cocoa futures data, right? This data right here. So what I'm going to do now is I'm just going to align it, but I'm going to pay attention to the fact that if we are going to generate a trading signal for tomorrow, say, or for today, I can only use data. In this setting here, we are working with daily variables, right? It's like low frequency trading. So I will just have data up until yesterday available. So what I'm going to do is I'm going to shift one day the data tables, the data frames. So I have today's closed price against yesterday's available data, right? And this is what we have to be very careful about that when building quantitative trading algorithms, right? To avoid what we call the data sort of a data leakage problem. Is it, if in my backtest, I'm using data that will realistically not be available at that point in time. So I might create a very good strategy, but I'm using, like I'm cheating, I'm using data that was not supposed to be used at that point. So this is something that whenever you're building a quantitative trading algorithm, you have to be very careful about it. So right here, I'm just going to plot those charts one at a time. So what we are seeing here, let me see if I can get this a little bit bigger. Again, we are talking about visual inspection here, but I'm just showing that with WeatherWise Studio and with our API, it's really easy to build like a large data set with several signals for many locations around the world, and then use it, for instance, in this case, to try and predict price movements. And if we take a look in blue, we have the each signal, right? This is drought risk for Bocanda, and in black we have the return. So what is return? I think everybody will know about that. It's daily return. I'm just calculating the percentual change between each day's price and last day's price, right? So how much, by how many percentage points the price changed from one day to another. And especially this, we can see some extreme points here, which we are really interested in anticipating, right? We have to do that because this is actually what we are trying to anticipate or predict. And this data here, the black line here, is what we call a stationary time series. It means that it revolves around a fixed mean, which in this case is a little bit bigger than, no, it's zero. It should be zero, right? On the right y-axis, we have the return. On the left y-axis, we have the signal scales, so different scales. I know that some statisticians out there would like to kill me for doing this, but I think it's useful sometimes if you have different vertical scales in the same chart. So this means that return is zero, meaning that there's no actually, if you're doing a random trade at any given day, the probability that the price is going to be up is the same as the probability that it's going to go down. So you do not have any tendency to have positive or negative returns. If you had an average different than zero, again, we are talking about that market efficiency hypothesis. If this black line was revolving around a line which was not zero, it means that you can put in your money on average, you're going to be making free returns, because on average that asset is just getting positive or negative variations each day, right? So we expect that. And if we take a look, we might see that what we want to use these things for, because again, we can always just generate a very, very large data frame with lots and lots of signals and locations and just feed this data into a machine learning algorithm and hope that it will navigate through all this information and find the right patterns to explore. But we are trying here, but this is very difficult because it has to navigate a very, very large space of possibilities. So what we are trying to do is we are trying to understand for ourselves a little bit of the patterns before giving them to the machine, right? And this is going to give us some idea on lags, for instance. So there's waves here. So what is happening here in these waves? We have winter and fall, right? Autumn, and then spring and summer, right? We're talking about heat. So whenever the signal is going up, is because you have more heat stress risk or drought risk. So this is summer. Oh, actually here I'm just filter the data up to 2021. Let's change that. Let's just see the entire series. And again, we have some signals that are zeros, as we've seen before. Now here, what happened? So this return plots, they are very interesting because they show us, okay, the average, which is again zero. We can see some extreme events, right? Here and here and here. And also the width of this wave. If it was a sound wave, which is not very different from this, it wouldn't be volume. So here we call it volatility. So this is a period of a higher volatility, higher noise. It's louder. Market is louder, right? It's the same as waveforms. And what we see here is that, as we know it, right? We've been studying this in the past episodes from early 2024, or at the end, or October, I believe, 2024, we started to see a very large market volatility. And these extreme points here, down points, they are dangerous because this is something that we also must always bear in mind when doing trading, which is, if you see a very large positive return one day, it does not mean that the price is going to continue to go up. It might as well just hit the bottom the next day. So this is what we're seeing here. We had big increases in the price followed by sharp decreases, sharp falls, right?
I mean, it's incredible, Paulo, though, because the volatility to some it quietens down a little bit, but it seems to continue from that
Yeah,
point onwards.
this moment. Yeah, yeah, because we are not fully recovered from that situation, right? And the markets are not yet sure that we are going back to normal in terms of risk. So there might be opportunities here right now, right? And we can see, for instance, the largest for this specific signal, right, at this specific location, the largest point in history was just before, or quite aligned with the start of this volatile period, right? So even though the signal has this periodical pattern, we have to understand what's the size of each wave and how many days. If you take a look here, you can see that we have many days with very high values for the signal. So this indicates that weather was really, we are able to see that weather was extreme or starting to get extreme at this point. Again, just at this location, we have several other ones. So this is Kumasi, right? So it's used to have like high points in the past. Not very, not much clear. No, it's not clear here what happened here before this period. Okay, in Makassar, I hope I'm pronouncing this right as well, just so it goes around. We can see a very extreme period again right before the extreme price movements. And here for Guayaquil as well, yeah, on the Guayaquil, it should be on Ecuador, right?
And I think an interesting point, Paulo, where I was chatting to someone in the energy space the other day, and of course, if you're doing HDD or CDD, you would be weighting by population. So, for example, in this case, we might be weighting by average yield of these locations as well, because it might be that some of these locations produce a lot more cocoa than others, of course, which would then have a greater or lesser impact on the price, right? So we're just looking at it purely from what was the signal saying and what did that then, kind of tracking it against this kind of moment of ongoing volatility, right?
Yeah, and also imagine we can really be creative here. We can weight by the size of the production size. We can also consider the logistics involved in each of these locations and use other types of signals. So like port disruption, all kinds of signals that are related to weather affecting the logistics of bringing this around the world, right? Many things we can just, there are many different aspects as of how the weather might be impacting these prices. So thinking about just two simple signals, we can see extreme values again, just right before or at the start of the volatility period, right? So for many signals, this one is very interesting because it never showed anything, never triggered anything except here, which is quite like few months before the prices went up. So this might be because we have lots, any signal in the real world, it comes with noise, right? So what I mean by noise is that we're going to have like extreme values. We had extreme values or high values in the past, but they actually were not. Well, we did not see extreme price movements after that. So this might as well just be noise. And part of our job and the machine learning's job is to separate the signal, the actual information from the noise, right? This kind of signal, if we were able to obtain a single signal like this, it would just trigger when it's quite sure that something extreme is going to happen, that is very good because it has very little noise, right? And this one triggered after the event started, and this one never triggered. And again, this signal here, the heat risk from IBADAM, you see that it was like normal values 2022, 2023, it's a little bit harsh. Then 2024, the biggest values ever, right before the movement, the price movements started on quite at the same time. A little, remember these lines, they are not aligned, right? We are always showing for this price movement, this day, we are just showing data up to the day before. So we know that we would have that data, we would have this data here, and we can take a look. I'm going to zoom in here from 2024 on to see that this might be really predictive signal here, just showing us. And then when we combine all of this, so this is the idea that we are going, that's the direction we are moving, right? Okay, we can visually see, we have to be careful. For instance, when we start to train and use machine learning to do the trading, actually, we are going to have to pay attention to the fact that during the winter and the fall, the signal is just zero because there's no drought risk or heat stress when it's not summer or spring, right? So if we use it, and if we give this to the machine learning algorithm indiscriminately, like it's all the same, it's going to confuse the algorithm because it's just seeing lots of movements here and nothing happening here, right? So we have to be careful, and we are going to show this. I'm just going to train that when it matters, so when the signal has any information at all. Let's just, for the sake of it, let's just like take a look instead of the entire history. I'm not showing the entire history, by the way, just 2015 on. Remember, we have data here from 1980, so 45 years of data, 46 years of data right now. So what I'm going to do now is I'm just going to filter this to start on 2024, and then we can see, right? So for instance, this signal here correlating with the large movement. So we see that the volatility was kind of building up, right? From the start of 2024. Maybe we want to see it a little bit earlier. I don't know. Let's start on June 2023. Again, it's good for us to see it more. So before this high volatility, we have the high values here, the signal from Makassar that we've discussed. So it showed like all-time highs right before volatility starts increasing and price movements were extreme, right? Again, when we are doing, the problem here is that we do not have the reference, right? Which is the same wave for all the years prior to 2023, which we were seeing before. But also the thing here is that we have to, and it's also a key point in quantitative trading, which is we have to figure out what is it that we are going to try and explore. Are we going to try and predict daily price movements? So today I'm just going to run my algorithm, and it's going to tell me whether the future price is going to be rising or decreasing tomorrow. Are we trying to predict extreme movements? So I just want this signal to be triggered if it predicts a price movement of more than, I don't know, 5-10%. Are we going to for longer term trends, like I would like to know what's going to happen throughout next week or next month, right? All of these are valid strategies, and the signals might be used for all of them. Depending on the case, it might be best suited for one or the other. Right here, we're just looking at daily. So what we want to do after this. So again, I'm just using two signals for, it's 5 locations, I believe, right? And the price. And what I'm going to do in the next episode is that I'm going to do a little bit of data wrangling here. So to be sure that I'm not using data from the winter, because it's not. I could even use the information that we have about for each of these locations, when it's sowing happening, when flowering happens, right? And apply the adequate signal to each of this growth stages and their respective time periods. We're going to do a little bit of playing around with it, and then producing a final data matrix. And then we're going to discuss what kinds of machine learning algorithms we can use for all of those different goals. So if I want to predict extreme movements, I might just like use a binary classificator. So I will take each of these returns and just flag it. Is it bigger than 5%? Yes or no? Then instead of predicting the price, I'm just trying to classify, given the weather data that I have from yesterday, or including today, what's the probability that the model gives that there will be a price movement of extreme price movement tomorrow? And of course, then we would have to have a separate model to tell us, is it going to be a positive return or negative one? Because if I tell you, okay, tomorrow we're going to have a 10% price change in cocoa future, if you do not know what's the direction, it's not very useful, right? But again, this all pertains to quantitative trading. We are going to talk a little bit about it. We are doing it already, but it's not intended to be a course or any kind of formal lecture on quantitative trading, right? There are many specifics involved. That's the idea. So using WeatherWise Studio API, we've built this data. And many of these capabilities, so for instance, for agriculture signals, what we hope or we expect to have, what we are working on right now, is that you might be able to use the metadata that we have on cocoa farms around the world. You might be able to just apply automatic filters for the specific dates if you want to. So give me cocoa. We have signals that are tailored for each growth stage. So give me a cocoa flowering stage stress risk for this location and in the time periods where flowering is happening. So this will make your life a lot easier if you're trying to collect weather data to do risk analysis or quantitative trading. So we are moving on from here. I think next episode we start to train on algorithms a little bit and see what's going on. And then as soon as possible, right, Josh, we are going to start to do those tradings ourselves to just see what happens. And maybe, Josh, we can discuss it, but maybe the coffee case might be interesting because, as you mentioned, the critical stage, right, where weather might really affect it, is going to happen in a few months from now. So maybe we can prepare for that. I don't know. We can discuss, right? But the idea is set here. So using weather data and weather signals, customized weather signals at the relevant locations, and WeatherWise Studio can give you all this data so you can create your own algorithms and also simulate them and backtest them using the platform.
And I think, Paulo, that's what I'm hearing from this is, using a combination of the WeatherWise dashboard and the WeatherWise API, depending on your technical ability, depending on what type of strategy, depending on how you basically want to utilize the data. Starting today, you can start to do a lot of the stuff that Paulo is showing you. And then as we go on this journey, as Paulo mentioned, right, more and more of that capability that he's building on his side is going to become just a default functionality in the platform. So that, maybe if you join us in 3 months, 6 months time on the platform or you're watching, after this episode's been released, there may well be some of these features that you don't even have to do as much of the effort on your side. But I really encourage you to go to weatherwise.studio. The platform's live right now. We've had a few people playing around with a few different signals. There's more signals that we're releasing all the time. So actually some of the next ones coming up will be the cocoa flowering and cocoa growing specific signals, as opposed to kind of the generic crop signals that we have in the platform at the moment. So go in, log in, take a look. And if you have questions for us, just leave them in the comments or drop us a line. We're more than happy to chat. So thanks for listening, everyone, and see you in the next episode.